You ready? Yeah, you got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them out.
Happy Monday, everyone, and welcome to all the LCMS Trading Club members that are catching the call live as well. Hope everyone had a good weekend, and if you have checked the markets out already this morning, it might be a little bit later in the day or earlier in the morning for you. There is definitely quite a lot going on, especially with oil and gold. But for today, we will be going through the Aussie and the Kiwi. With Jin, I'll be going through the DXY and also touching upon the equity markets as well and what's been going on in the Australian Stock Exchange so far today. And Kim Hong will also be discussing the NFP data that did come out on Friday night, and definitely a lot there to summarize and just to pay attention to with the upcoming inflation data as well on Thursday. So a lot to prepare for and a lot to just to go over for projections heading into possibly the first interest rate rise this month as well. But just before we get into all the trade ideas and also the commentary about the fundamentals that are happening recently in markets, I'll just go through the risk disclaimer as well. And that is, any information shared in this video is not intended to be a trade recommendation. It is solely the opinion and views of the speaker. So please remember to do your own analysis prior to entering any trades. And again, feel free to ask if you do have any queries on some setups in the markets as well. We are happy to help. And just to get us kicked off for today, I'll pass it over to you, Gimme, to go through the Nfp release from Friday night last week.
All right, thank you, Scott. Happy Monday, everyone. Okay, NFP. Well, apparently there was actually a kind of, I would say, surprise. Okay, but you have been forewarned. Okay, during the NFP prep. All right. So what was the surprise? Okay, 678,000 jobs will be added. Okay, back in February. All right. So like I was mentioning, okay, if let's say the figure was actually around the expected 400 or 300,000, okay, 300 to like 600,000, then we probably see like a little move in US dollar, okay, because it's pretty much within the expected range. All right, but then any figure above 600,000, we are likely going to see a strengthening in the US dollar. Okay, and as a result, as it turns out that 678,000 jobs are being added, and we actually see a strengthening in the US dollar. Well, actually not against all currencies, okay, but against the riskier ones like Euro dollar, Pound dollar, Aussie dollar, Canadian dollar, and slight strengthening against the Switzerland francs, okay, but dollar yen was really just not very clear in terms of its move. All right, so overall very good figure for the month of February, okay, and that's not all though. All right, for the month of January there was actually an upward revision, okay, from 467,000 to 681,000. Okay, that is actually a 18,000 upwards revision. All right, and then for the month of December, there was also a upward revision from 510 to 588,000. Okay, which means there's actually a total of I think for the month of January and December 2021. Okay, there was actually a total upwards revision of I think 96,000 jobs. Okay, which actually puts us, well, put the whole figure in a very put the whole jobs market, okay, in a very good situation. All right, so if we were to look on later on, I'll be sharing another chart with you guys, okay, some chart that I actually tabulated by myself to see where the current standing of the jobs market is. Okay, so that is the payroll figure, okay, non-farm payroll figure. And then comes the unemployment rate. Okay, there was actually a further decline in the unemployment rate, okay, from the previous 4.0 to the current 3.8%, okay, which is actually very good. like I've mentioned during the past, I think 2 or 3 releases, non-farm payroll data releases, okay, unemployment rate is actually very close to, its pre-pandemic level already, all right? So previously when it was 4.0, I mentioned that, actually, you know what, let's just take a look at the chart, okay, where it is, okay? So this is the chart of unemployment rates, okay? So pre-pandemic level is actually around 3.5. You see over here 3.5, 3.6, 3.5, 3.5, 3.6, 3.5. So we can actually use 3.5 as a pre-pandemic figure, okay? And then it actually rose to 4.4 for February. Okay, that's when the whole pandemic actually started, okay? And then it just shot up to 14.7%, okay? And then since then, it has been declining steadily, okay? And at the moment, it's 3.8%. So if we were to use 3.5, okay, percent as a measure for pre-pandemic level, okay, then we are actually 0.3% away. Okay, the US is actually 0.3% away from the pre-pandemic unemployment rate level, okay, which is, well, I would say, very good, okay. Probably like, if it continues inching downwards for this unemployment rate, then probably in 2 or 3 releases down the road, okay, the unemployment rate will actually return to the pre-pandemic level already, okay. So another good piece of economic indicator, all right. Then the last one, or not the last one, okay, I would say one of the another major indicator that we're looking at is the average hourly earnings. So 0.0, okay, for the month of February. What does this mean? Okay, this means that average hourly earnings did not increase, neither did it decrease. Okay, basically no change. Okay, no change in the February's average hourly earnings. Okay, with respect from January. All right, and then that's on a monthly basis. Okay, on an annual basis, okay, we see that there's actually a slight decline from the previous 5.5%, okay, to the current 5.1%. So normally so on a yearly basis, okay, 5.5, to be honest, is quite strong, okay, and then there's a slight decline to 5.1, which I would say is still decent, okay. If not for the no change in February, okay, I believe the yearly data wouldn't take that big of a hit, okay, a 0.4% slowdown in the increase in average hourly earnings, okay. So this may initially be a concern, okay, to the market, okay, because for this 1 month, okay, February, wages did not increase. So many out there are actually anticipating that this may be an early sign that inflation is starting to stagnate, all right. But I would say, to be honest, okay, the actual inflation data would still have to be released, okay, before we can have a more certain picture of the whole certain inflation picture, okay, to be more certain of the inflation picture in the US, okay. Of course, the inflation data will be released this Thursday, all right? So we will have to pay attention to it, okay? So at the moment, I wouldn't be too concerned about this one month data that shows no change in average hourly earnings, okay? So unless we were to have several more months, okay, of either unchanged or even a decline in average hourly earnings, okay, then that will be, if that's the case, then that will be a pretty much, I would say, it may actually be a start of a stagnation or even a coming down of inflation, okay. So that's, it's too early to tell at the moment, okay. It may just be a 1 month thing for the average hourly earnings to have no change, okay. So we will have to, look forward to the next few releases, okay, to see if average hourly earnings really starts to decline, and there may be an early indicator of inflation stagnation, okay. So that's for the average hourly earnings. Not to worry at the moment, okay. And then another piece that I would like to show you guys is the participation rate, all right. So there is actually an inched upwards, okay, of participation rate from the previous 62.2% to the current 62.3%, all right. I would say it's a good thing, okay, although it's only by a small amount, okay, just an inch upwards, okay. overall, based on this data alone, okay, we can say that, or we can see that there are actually more people, okay, in the US that's returning back to the workforce, which is actually a good thing. All right. Nonetheless, okay, this is still below the pre-pandemic level. Okay, let's take a look at the graph, and then we will know. Okay, participation rate. So over here, okay, I would say so this is actually for the month of February. Okay, 63.4%. All right, participation rate of 63.4%. I would say that's around the pre-pandemic level. Okay, so if you look at the previous month, 63.4, 63.2, 63.2, 63.3. Okay, so the 63.3, 63.4 level would be the pre-pandemic level, and then when the pandemic actually hit, it declined to 62.7 and then 60.2%, and then since then it slowly increases higher and higher and higher, and then coming back to our 62.3. So 62.3 to the 63.3% pre-pandemic level is still 1% away. Okay, so that means there's still quite a bit of people, okay, in the United States who hasn't returned back to the workforce. Okay, so there's still room for improvement. Okay, but at least, okay, we are seeing some decent upwards move from the previous, I would say, the past 6 months. Okay, like since September 2021, we see 61.6, and then 61.6, 61.9, 61.9, 62.2, and then now 62.3. Okay, so hopefully this upwards trend, okay, of the participation rate will continue. All right, and that will definitely lead to have a positive impact on the number of jobs being added. Okay, because just imagine this: if the number of people who were actually demoralized, or who were actually, because of safety, decide not to be employed for the time being, okay, has started to return to workforce, okay, started to look for jobs, okay, then that will definitely, well, not definitely, but that will actually have a higher chance of the number of jobs added into the economy to increase, right? So I would say it's still good, okay. We still definitely need to see more improvements from the participation rate, okay. So all in all, I would say, based on these 4 indicators: unemployment rate, non-farm payrolls, participation rate, and the average hourly earnings, we are still seeing quite a decent to strong, okay, I would say decent to strong employment report from the US. Okay, so keep it up. And the thing is, okay, as a result, all right, the US dollar actually did strengthen, like I mentioned just now, but not against all currencies. Okay, this is not actually a across the board kind of a strengthening. Okay, but of course against the riskier currencies, definitely there will be some form of strengthening, like the euro dollar and the pound dollar. Okay, and okay, so the impact of this report on the Federal Reserve, okay, would be this. All right, personally, I feel that this is actually in favor, okay, of a rate hike in March by the Federal Reserve. All right, as to whether, okay, this will actually provide a stronger stance for the Federal Reserve to carry out a 0.5% rate hike. I would say this report, okay, especially the figure of 678,000 and the unemployment rate of 3.8%, okay, will definitely add more conviction, okay, into the Fed's decision to carry out a more aggressive rate hike. Okay, it may not be in March, but it can be in the next few meetings, because remember, the Russia-Ukraine war is still ongoing. Okay, but once this whole war, cease and things like that, once this whole issue is over, okay, it is very likely that the Federal Reserve will carry out a more aggressive rate hike. Okay, just based on this this current employment report alone. Okay, and keep in mind, okay, employment is not the only thing that the Fed looks at. Okay, inflation is another thing. All right, and if you look at the calendar, okay, let me just what Scott has mentioned, the US CPI data will be released this Thursday, right? So if you were to look at this Thursday, look at this. All right, headline inflation for the month of February, okay, is expected on an annual basis, okay, is expected to rise by 7.9%. Okay, it's close to 8%. Okay, remember, like during the prep for NFP, I was saying that inflation is another piece of data that the Federal Reserve will be looking at. Okay, but in a scenario whereby we're going to get something like 8 or above 8%, all right, then the Fed will feel much more convinced, okay, that they need to carry out an aggressive rate hike. Okay, so on the employment side of things, we pretty much get what we need, okay, for the Fed to be more aggressive. Okay, so right now what we will have to pay attention to is inflation. Okay, will we actually be getting a piece of inflation report that that really pushes the Fed to be more aggressive? Okay, if not this month, then maybe next month. Okay, or at least after the whole war is over. Okay, after the whole war has a conclusion. Okay, so look forward towards this piece of inflation data this Thursday. Okay, and definitely it will have a strong impact on the Federal Reserve's decision on interest rate hike. All right, so for now, do you have any questions on NFP? Okay, not sure if you guys actually traded it, but yeah, there was actually I would say quite a bit of a short term to scalping opportunities last week during the data release. Okay, so if there's no questions for now, okay, I will hand it over to Scott for his analysis on the DXY. Over to you, Scotty.
All right, thanks very much for that, Gimme. And I'll just go straight into the US dollar, and lot of upward movement. I've got the daily time frame up. I had to scroll back to get a bigger zoom because we have seen a bit of a price explosion. Now, over the weekend, there really was no resolution to Ukraine and Russia. So we add that factor into the situation with the NFP as well. And it does look like the price, and I'll just go to this now. So this is more the international price. This is just to add a consideration for the inflation coming out. So this is the Brent crude price, and let's go to the weekly. So that's going to factor into inflation. Now, oil has been on the move for a little while now because obviously the inflation is out in a few days. So the worst of it hasn't actually been able to be captured. So I just advise people just to consider that as well in regards to the US dollar index again, because it's always nice to try and catch a reversal in regards to mostly the euro US dollar, but you've just got to be mindful that there is a lot of variables, and with the US dollar itself. Now, from a trade perspective, I'm not really sure about this one. So let's go to the hourly and just see. So we're currently trading at 99 flat or just above. I've got a level down at 98.23 and another one that was formed at 98, let's call it 98.50. So that still means it needs to pull back 50 pips or so. And with the news, it's an interesting situation because there isn't really a lot of news out. We were talking, Gimme and I, before this, the fact that, so this is Monday, this is in GMT +8 time zone here. We got Tuesday, there is some news, but not really a lot of significant impact on price. Even the JOLT's job opening, that's probably have a minimal effect, to be fair. And then we've got the inflation that's coming out 9:30 on Thursday. Now, we do have the 8 o'clock to 9 o'clock call to prepare everyone for that. So that'd be something worth hopping onto as well. So from a catalyst standpoint, it's really more the side effects into the oil price and what is going to happen with that and how the US is going to deal with it, because you need to appreciate the US does not want the price of oil like this at all. So they're really going to try and reach out to other countries because, obviously Russia is going to be very hard to deal with in what they're doing. And it doesn't look like they're looking to negotiate. The ceasefires failed twice as well. So it looks like, and then there's chatter that Moldova, which is south of Ukraine, they're not associated with NATO. So we could see months and months and months of this. So it's going to be really difficult to say where the top is on the US dollar. I've got 100.41 as the next support resistance level for the US dollar index. Now, what I do want to go to now is I just want to touch upon a couple of the other charts. So we've got the price of gold as well has taken off. We got to 2000 briefly as well in the 1 hour time frame. We've seen commodities really get an inflow as well as the US dollar has too. So we've got gold. I'll just show you West Texas, US oil, and that gap up there. So there's just a lot going on, and you want to be wary as well. Even iron ore as well. We've seen that gap up too. So there's just a lot going on. There's copper that's taken off too, I notice. So what I would say to this from a perspective of trade ideas is that for now, looks like the US dollar is, really finding some strength, and it's just something to really consider if you are, looking to trade reversals. So when commodities run like this, it's just meaning that there's an inflation issue that's skyrocketing, and you just want to be a little bit cautious. So from a US dollar standpoint, pullback to 98.5 would be the first thing to watch for. Ideally, that would result in no significant updates of severity that, suggest that it's getting worse in Ukraine, and that could be an opportunity to get in. So other than that, that's really what I've got for today. And again, just keep it short term as well, because a lot can, flip flop, like we saw last week with the nuclear power plant, and there was about 12 announcements out really quickly, and then it turned out it wasn't even on fire. It was a training base near it. So, and that can really see markets go all over the place. But we do have the Aussie and Kiwi in focus now with Jin, and I will hand it over to you now, Jin.
All right, thanks for that, Scotty. So, a couple of things to look at, and I'm quite happy that Scott was also sharing the iron ore and copper prices, because I actually brought up the same thing. We didn't even discuss this, but iron ore prices climbing quite significantly, currently at about that 160 range. That also explains why we have seen, despite the strong non-farm payroll numbers that Kim Hong was just sharing with you, why we've seen the Aussie dollar climbing so significantly over the last couple of days, actually in reverse compared to the US dollar, right? So everything else has been US dollar strength. We've seen the pound drop, we've seen the euro drop very significantly, but yet the Aussie and the Kiwi dollar has been on that upward climb towards significant resistance level, multi-year, multi-period significant levels, resistance levels. So several reasons because of that will be iron ore, copper, commodity prices have been climbing. So that's actually been, with the Aussie being an extractive industry and being so correlated to the prices of all these commodities, we've seen the Aussie dollar climb towards the upside together with the New Zealand dollar. One thing to pay attention to as well is that looking at the news here, you see that today, not a lot of news to be released, even into Tuesday, into Wednesday, not that much big hard impact news to be released, all the way to Thursday with the Euro and the US CPI numbers to be released. So usually what happens is when we have a big news, for example, or especially like the non-farm payrolls on Friday, we saw that big move on the dollar. I think that, dollar index could go beyond the 100 level. We're going to see that retracement today, right? Especially without the news and the big news before, and now without much news happening, we're going to see some retracements happen. So be very careful with retracements. Back to what we're looking at, the Aussie dollar, we saw that big move up towards the 74.43 level, almost 74.50 level. And now on H4 time frame, looking like a small retracement back down. The easy trade will be to look for it to move towards that 75.40 resistance level. But what I think is likely to happen at this point is that we're going to see some retracement first. So we're going to see that maybe track down a little bit, right? Maybe test that, oops, let me move that away. So maybe test that 74 region or slightly below before bouncing back up. So I'll put a line there just to make it a bit easier to see. So that 74 region, it is at that point right now. I think that it will breach that. It'll look like it's going to track lower, but the buying opportunity will be towards the upside. What I'll be looking for is buying at about above 74.30 for that 75.30 level, right? Stop loss at about 30 pips. Okay, so at this point, what you should be looking for is a 30 pip stop loss, about 100 pip take profit, a 1:3 risk reward ratio towards the upside, but not ready to get into right now. I think that we're going to see some retracement, possibly some consolidation before that move towards the upside. But this is all dependent on how the US session opens later in the day. All right, so we've seen the iron ore prices climbing. It's also with that retracement down. If I bring it to the H4 time frame, you see that retracement right now. So it kind of goes in line. Iron ore retracing, Aussie retracing as well. We're going to see that come back down. Look for that bounce before that buying opportunity. With that said, about the Aussie on the H4 time frame, the New Zealand dollar has had that significant retracement, or is going through a more significant retracement, because it's come very close towards that 69.40 resistance level. It's come hit that level and has that big retracement back down. Currently at 68.90, I think that we're possibly going to see more retracement at this point. Maybe, I think that would be quite a big move to from 68.90 towards 68.40. I don't think it'll come all the way down, but similar, the New Zealand dollar move similar to the Aussie. I think we're going to see some retracement. It'd be nice to look for buying opportunity as it bounces off this 68.40 support level. So the best trade will be to look for a buying opportunity there. Stop loss, you can keep it very tight at about 20 to 30 pips. Take profit towards the recent high at about 60 pips. A 1:2 risk reward ratio towards the upside, but looking for that retracement before that buying opportunity. I think this will probably move quite a bit because we have seen the New Zealand dollar climb very significantly, probably a bit overextended, hitting a major resistance level. Look for that retracement before jumping into that buying opportunity. I think that the Aussie and Kiwi dollar does give us some trading opportunities, but I think the bigger opportunities and what I'm stalking right now will be more towards the pound, the euro, and also the CAD. So, more details about that over the next couple of days. With that, I'll pass it back to you, Scotty.
All right, thanks for that, Jin. And we will be sharing the upload as well, ASAP, for all the members that didn't quite catch the whole call. Thank you to everyone that did watch it, and I hope you have a nice rest of your day, and see everyone in the chat. Bye for now, everyone. Have a great rest of your day.